All right, what's up, traders? Another one here from the Dark Side family, and Happy New Year to you guys. This is our first new video of 2023, and I wish you guys, as always, all the best in your trading. In this particular video, I want to talk to you guys about the C word. The C word for me is consistency, and I want to talk about a few ways that you can actually look to achieve that. And I think that's probably one of the most challenging things in trading is to maintain a level of consistency. And I mean, we have to believe that, we have to understand that, because we're talking about trading money, okay? And that's the most important thing on this planet. And this is the entire planet's money that we're looking at, and we're looking to extort and we're looking to steal from. You know what I mean? Because call it what you want. If you're able to print money from your phone, that's as close as you can get to legally stealing money compared to the people that are out there busting their ass to make it working physically. You know what I mean? So again, that's what I'm going to kind of dive into, guys. And these are just notes that I was just kind of writing down, just things that I was going to share with my team, and I figured I'd share with you guys as well too. So just bear with me. You know how I make these videos. There's no editing. This is just me off the top. So let's talk about it. As a group. So I think if we look at the conditions of trading right now, I think anybody who's trading at a high enough level, regardless of the strategy, can all see what's happening. I believe it's because of the popularity that's trading has taken on these last few years that the market has just probably become as treacherous as it can possibly be. I mean, it really can't get much more manipulated at this point, at least in my opinion. And I'm very familiar with the majority of the popular strategies out there, so therefore I'm able to mark up their ideas and their ideal scenarios, and I'm able to execute where they would execute, and I'm also able to see the results. And the results aren't good. Another easy way to look at this is to just look at the prop firms. Why is there prop firms popping up every 5 minutes? Because again, they're betting on you losing. And the difficulty in the market is not getting any better. So how do you maintain any type of consistency becomes the question. So I think what you have to do is you have to learn to consistently do things on your own and not just rely on the market to give you consistent results. So one way to do that, and I think the most important thing and the important way to gain any type of consistency, is to reduce your exposure. You have to reduce your exposure. You have to stop trading every day because you feel like trading. You have to stop taking, this one looks pretty good, I'm just going to give it a shot. You have to stop taking trades like that. You have to stop following other people's ideas and trying to duplicate it onto your own charts. You have to stop all of these things, because all of those things just lead to one thing. They lead to inconsistent results. Okay? When you take shit setups, you normally get shit results. So the convenience in trading, the fact that we can just push a button while we're at a red light on our cell phone and be in a trade, we can just enter a trade from Monday through Friday at any single point of the day. Again, guys, it goes back to the casino mentality. That's why casinos are always open. They're always open. There's always parking. There's free drinks. There's everything they can do to get you to trade. Okay, and that's how you need to start thinking about the market too. You don't need to trade every day. You don't need to trade bullshit setups. You need to wait for your bread and butter setups, your high probability setups, the ones that you've personally back tested 1,000 times and feel confident in. Because that is going to lead you to do what? To taking less trades, because you're not going to see that perfect scenario happen as often. And less trades, believe me, guys, less trades will equal better results. Okay? You got to get picky. You've got to get very selective on the things that you're going to trade, on the setups that you're looking at. That's the only way to even begin to consider the word consistency. It's you. Forget about the market. Look at yourself. You can't control the market, but you can control the things that you do. Okay, so that's one of the easiest things in the world. Stop taking these stupid ass trades where you take a trade, like for example, right here, I'm going to buy US 30 right now. Why am I going to buy it? Because I just feel like it should go up. It came down long enough. I feel like it should go up. Guys, you can't take trades like that. You've got to think. You've got to justify. I've made a video before about how when you enter a position, it should be no different than a lawyer proving his case in a courtroom. you have to justify every single reason why you're going to take this long position, and you've got to justify it and explain it to your peers on this is why it should go long, and not only that, but this is why it should not go short. And this is how I came to those conclusions based off of X, Y, and Z. And this is why I feel that it's going to go this way. This outweighs this. This justifies my position, and I'm into the market. If you actually do this checklist, guys, and stop bullshitting and stop just trying to look at something because you want to get in something and you're just going to invent a new fucking order block or a new something and buy from here because you see a small that will not get you near consistency. Consistency does not boil down to the market. It boils down to the person that's behind the screen, that's trading. That's your only edge. It's you, you know? So another thing that I think you should do is when you do see that perfect scenario, okay? Again, now we'll just use this. This is live US 30, but let's just say this is how you trade. This is your perfect scenario. What are we going to see? Breaker structure right here, right? Decisional, silly order block, extreme, whatever. So let's just imagine this is your perfect scenario right here. Okay, this is what you've back tested 1,000 times. You feel very confident in this. When you look back on your notes, you see that this plays out maybe 80% of the time. That's excellent. 80, 90% of the time. That's great. You know what you need to do with these scenarios, guys? You need to actually take a bigger risk on these ones. Take a chance. Take a chance. Maybe I recommend, you wager no more than 0.25%. But if that's how you're doing it, maybe take a 0.5% or a full 1% on something that you really, really, really feel confident in. Because in reality, if you are maintaining any type of consistent thought process before you enter a trade, you're not going to see trades that often. You won't. There'll be weeks where the market's moving and you'll be on and off all day, but then there'll be a week or two where there's nothing going on. So if you're able to maintain what I'm telling you, that patience on that week when things are shit, instead of taking 5 or 10 shitty trades, and you're risking 0.25% every time, right? And you take 5 trades that week, even though the conditions were shitty, you were just forcing it because you're still working on your FOMO. But either way, if you do that 5 times, that adds up. That's 1.25% that you risked. Instead of doing something like that, wait for the conditions to be right. Wait for your perfect scenario that you love to see. And then take that same money you were going to risk on the shitty setups anyway and actually put it in on one you believe in. But the only way you're going to get to achieve that is by being patient and being able to avoid taking those shit setups all week when there's really nothing there. Because a lot of times, guys, there is nothing there. I tell my team all the time, if you look at the charts long enough, you're going to see something. They're designed to do that. Every single candle that prints is going to lead you to believe something else. That's what it does. And as it moves, and there you go. There's your break of structure, and there's your buy opportunity, right? And now you want to buy to get long, but that was somebody else's sell opportunity to sell and get short. There's always something there if you look long enough. So that's why, guys, sometimes you just got to stop looking and just wait to see what you need to see. When you see our Telegram channel get quiet, that's probably because I don't see anything. When it's lit up, that's because the market's showing something that I want to see and that's going to allow me to get involved, something that I've back tested that's given me consistent results, and that's why I choose to get involved then. Again, the idea is to reduce your exposure. But when you do actually see it, when you see that weak hand sitting right there, that's when you attack. That's when you go all in, and I don't mean all in full margin. I mean, that's when you actually take a chance. There's no point of taking little stupid chances all day. I mean, think about the way the lion hunts. They don't just chase around squirrels all day. They don't do that. They wait and they wait and they wait for the nice big animal that they want to go after. And then they use all their energy and they attack and they don't look back. But in the meantime, they're not chasing squirrels all week. That's a waste of time. It's unnecessary exposure. It's just there's no consistency to chasing squirrels. It means nothing. It means nothing to that. You gotta be patient in what you do. You have to be very predatory-like. You have to think about it like this, guys. Again, if the goal is consistency, if you want to just have fun and trade because I guess you're rich and you just love wasting money, or you want to play with prop firms, then go ahead and you play your games all day long. But that'll never get you to any consistent result, regardless of the strategy. You could trade trend lines and be more consistent than somebody who trades the latest smart money course with all the cool terminology. You can be more consistent trading trend lines if you are willing to be patient and wait for exactly what you need to see to get involved. Because at the end of the day, guys, the way trading works, it's not like how can I explain this? It's not like the lottery. You can't just play every day, play every day, play every day, and hope you're going to hit it big one day. Trading don't work like that. When you trade every day, you're going to lose very, very often. It's not one of those things where the more you do it, the more you make. When you think about trading in that way, it's the more screen time that you put in, the more back testing, the more reviewing your wins and losses. That's the more that you put into it, the more that you'll make. But the more trades you take is the opposite, in my opinion. The more trades you take is the more you're going to lose. Again, because exposure is the enemy. The more you swim in the ocean, the more likely you are to get bit by a shark. It's very, very simple. And that's how you have to think about the market. And again, guys, I'm not even talking about strategy. I'm tired of talking about strategy and this shit. Like, forget about that. You need to start thinking. And that's what we trade on the dark side. We talk about thinking. I don't care how you trade. You need to think first. And that's what it is. It's exposure, man. And it's so hard to be patient because trading has become so convenient. Push the button on the phone, Think about it like this, guys. Think about what prop firms do, right? Why are prop firms so successful? And by now, I'm sure everybody listening to this knows that prop firms don't like you. Prop firms are there to take your money. You're not going to trade for them. You're not going to make money for them. They're betting that you suck so bad that you can't make money through the market. So they're going to give you the chance. They'll give you $1 million if you can do it, right? That's what they tell you, $1 million, because they know that you can't pass and maintain any consistent results. But what is the prop firm's main thing? What is the main thing in the rules, right? Two things: percentages and time, right? Percentages and time. So you should think to yourself, man, maybe I should pay a lot more attention to percentages. In other words, my exposure, right? My percentage of how much I'm risking, my percentage of how often I'm actually in the market. And then I should maybe think more about time. Because if these are the only two rules prop firms have and so many people can't pass them, there must be something to this whole percentage and time thing, right? I mean, think about it, guys. Why do they give you 30 days to pass? And some of them are getting more lenient now because people are catching on to it. But why are they giving you 30 days to bet? Because they're playing the time game on you. They're trying to do what? By giving you a time limit, what are they doing? They're reducing the amount of patience you're allowed to have by forcing your hand into the market. Again, patience, right? Patience, exposure, patience, exposure. That's why they're doing that. Why do you have 30 days or why do you have 60 days? Because they know that you're probably not going to see perfect scenarios that often within that 30-day time frame. And the fact that it's on your back and you've got 20 days to go, 10 days to go, it's going to force you to do what? Expose yourself to the market. It's going to force you to swim in the ocean more often because you've only got 30 days. You've got to do it. So it leads you to more exposure, which leads you to worse decisions, rushed decisions that you probably wouldn't make if you weren't under a time limit, And then they ask you for, what do? They give you a 10% return. Again, the example before with the prop firms, $100,000 account, right? They want a 10% return, which is what, guys? $10,000, right? But yet your minimum or your maximum drawdown is also 10K, which means that where the hell is my other 90K? It doesn't exist. You're not trading a $100,000 account. You're trading a $10,000 account because that's your max drawdown. And that's how much you need to make in order to pass. So therefore, what are they asking you for? They're asking you for 100% return in about 30 days. And you don't have to tell me. I know there's other ones asking for 8% return, other ones that don't have any amount of days. I know all that shit. This is just for the sake of the example. But think about that. They're giving you 30 days, and it's not really 30 because you can't trade Sunday. I know all that stuff too. But you see what I'm getting at here, guys. Again, I'm just asking you to just think a little deeper. Why are they playing this game on you? Why they want 100% return? You know what I mean? And they want it in X amount of days because it does what, guys? It causes you to be less patient. It causes you to increase your exposure because now you've got to risk more money to make enough money to pass. And now you have to risk more often because you only have 30 days to do it. You see, guys? So These are the things that play on our minds when it comes to looking for consistent results. It's time, it's exposure, it's being able to identify when we're forcing a trade or when we actually see something that we've seen before plenty of times and it makes sense for us to get involved with. Don't risk that 25.25% on shit setups. Risk 0.5% on a really good one that you're confident in. But it's going to take something from you. It's going to take the cooperation of being patient and waiting for it to develop. So again, there's so many little tips I can give, but they all kind of boil back to the same thing. We have to stop trying to think about hitting it big. I'm going to hit it big. I'm going to hit it big. That's casino. That's lottery mentality. What you need to do is focus on not hitting it big once, but hitting it small often. Because again, I show you 1% adds up. 1% per trade, that adds up to a big, big return. 10% at the end of the month. For anybody who actually trades at a high level of real capital, that 10%, 15% a month is an excellent, excellent return. Put your money in the bank and see how much you get back, not even per month, but per year. Less than 1%, 0.25%, 0.5%. Or go to trade for an actual prop firm, a real prop firm where they actually do have a hedge fund or a couple $1 million to play with. They don't want 20% return a month. Hell no, because they're saying, what, 20% return? What are you, crazy? Your exposure is way too high. I don't want you risking my money like that. That's stupid. The market doesn't work like that. A real hedge fund will maybe, if you can give them a 5% return a month, that's great, man, because you're talking millions of dollars. With 5% return, that's great. That's outstanding. If you could do 2 or 3% return, that's outstanding per month. 2% return per month, that's 24% a year. That's almost 25, a quarter of what they invested return in a year. Imagine. So if $1 million, that means you put $1 million in the bank, you get $250,000 back every year. Every year you make on interest on that or on that account. Imagine. That's what they're looking for. Nobody's looking for 20% a month. Are you kidding? Or a week or a day or I'm telling you guys, it's different, man. We can't think about hitting it big. You've got to hit lots of small, consistent trades and results because that's what's going to help you get more consistent, and it's going to decrease your stress so much when it comes to trading because then you don't have the pressure of being 2-3% in drawdown. There's pretty crazy. 1% drawdown is enough if that's the case. And again, that goes back to being more picky and more selective with the trades that you take. Don't let time play a role in your trading. Fuck if you don't need a prop firm, fuck them. Use your own money. Watch how much easier it is. Because then you don't have a 30-day window that you have to worry about or a 10% return that you need. All those things will move away. And what else you can work on, guys? Doing things consistently yourself. How you can do that? By consistently holding your winners longer, by consistently closing your losers sooner and not moving that stop. Consistently, I want you to work on consistently not doing this, not going like this. Oops, oh, they're coming again. Oop. Consistently stop doing this, okay? Consistently hold runners and let your wins actually last a lot longer. Those are the little consistent things that you can work on personally, that you can actually control because the market's going to do what it wants. All we can do is try to react to it in the best way possible to give us the best result possible. And when it comes to consistency, I think that, understanding the conditions that the market's in, making sure it's your ideal scenario that you've back tested many, many times, you feel, and sometimes we joke on the dark side, I'll show a setup and I'll say, you can bet the house on this one. And I don't ever recommend you do that, but that's just how consistent I feel. And those are the trades that I'm involved in. I don't really give a shit about the other trades because I feel like that's me trying to be right and show that I know so much. And I realized a long time ago that being right and making money are two different things, and you want to be on the side of making money. So, understand the conditions, find your ideal scenario. When you see it, take a chance at it. Stop trading the bullshit setups that you're saying, I'll give it a shot because I'm bored. Stop doing that because you'll never gain consistency. Reduce the exposure, be picky, be selective, and when you see it, go for it, man. And again, it's you versus you guys. I think this will help get you on that road towards consistency, but just make sure that you understand what consistency actually means before you go for it. So hope y'all got some value, and I'll talk to you soon.